Thank you for joining us at xm.com for this Forex Preview video. We'll be having a look at UK data coming up this week. I'm Cristina Marujos. With me today is investment analyst Cristina Partenido. So Friday holds Q4 GDP numbers out of the United Kingdom, Cristina. What are the expectations and how important could this data be?
Hi, Christina. Well, I will start first with the second part of your question. Definitely, any evidence on how the economy is performing is crucial, especially as the pandemic risks and all the negative effects from the pandemic as regards the ongoing supply chain disruptions and labor shortages are not expected to disappear anytime soon. However, the British GDP growth figures are for the final quarter of 2021, and they may be considered outdated since a lot of things have happened since then. Actually, we have more updated stats about how the economy has been performing in January. Particularly, the market business PMIs for January are already out and have already signaled some stabilization in the manufacturing and services sectors. Notably, the survey has also shown that businesses are facing higher production costs and are forced to raise wages to attract the right workers. So they are more willing to transfer some of their higher expenses to consumers, which means that inflation may remain elevated if more businesses are raising their prices. Moreover, businesses don't expect any meaningful recovery before February, so that is a discouraging sign for their investment decisions and consequently for economic growth. Currently, analysts are expecting preliminary GDP growth figures to show a steady growth of 1.1% quarter on quarter and a slight annual slowdown to 6.5% from 6.8% previously, which would still be healthy for the economy, but I don't think the stats will bring anything new to the table. The Bank of England has already raised its interest rates twice, once in December, and then it further pushed them up to 0.5% last week. So December's GDP growth figures could be considered outdated and may not bring nothing new to the table. As I said before, apparently GDP data could be softer and closer to pre-pandemic levels this year as the comparisons move away from 2020 levels. So any softness may not be a big surprise to markets, but still probably January's and February's GDP stats could be more important to watch.
And let's also have a look at the pound. What is the broader outlook for the currency moving forward, especially since we're seeing other major central banks turn hawkish as well?
Well, I don't think that the pound may aggressively react to GDP data this week. As I said before, the data may not reveal nothing new for the economy. Well, the UK government decided to avoid any strict lockdowns to fight the Omicron variant, which suggests that economic growth did face big headwinds at the end of 2021. But still, the fast spread of infections have probably scared consumers a bit. So softer GDP growth readings wouldn't be a big surprise on Friday and could provide little direction to the Bank of England and therefore to the pound. So the data may not create much volatility for the pound. Now, what could move for the currency? I think the US CPI readings for January may prove to be a bigger market mover tomorrow. For example, if they beat expectations calling for a steeper rate hike in March for the Fed, then that could push the pound dollar lower. Speculative net positions show that traders have become more bearish on the pair, but how deep the decline could be, well, I don't think that it would be a very sharp move since the Bank of England is already ahead of the Fed in terms of rate hikes, and it's also expected to raise borrowing costs 5 times in the year ahead. So policy divergence between the Fed and the Bank of England may not widen in the year ahead, and that may keep some floor under the pound.
Cristina, thank you for joining me today. This was a Forex Preview here at xm.com.